because of the weak economy, the consumer demand that's ultra low right now, the consumer sentiments right now are at the bottom. Honestly, I don't feel like it's going to be a booming market. Even with the Bank of Canada stimulating the economy, nowhere close to a seller's market right now. Despite the multiple offers, you are able to put your conditions, do your due diligence, do your financing, all those things. So do not let anyone tell you that, oh, it's going crazy, we have 5 offers, we just have to go firm. We are the least performing GDP amongst the G7 countries. This week, the Bank of Canada did deliver a jumbo rate cut of 50 basis points. Now, that does bring up a lot of questions. What does it actually mean for the broader economy and for the real estate market? And more importantly, what can you expect heading into 2025 for the real estate market and for the broader economy? We're going to dive into some data-driven insight right here in this video. You can see I've shared my screen. We're going to dive into some key stats and data that came out from the Real Estate Association here in Kitchener-Waterloo as well. So it's going to be packed with value, and like I said, it's going to be data driven. So stay tuned and let's get right into it. Hello and welcome. If this is your first time to this channel, be sure to subscribe and tap on that bell so you are first to learn about the current market in and around Kitchener-Waterloo. My name is Dixit. I am a local real estate agent serving Kitchener, Waterloo and surrounding areas, and I help many families relocate in and around KWC, and I love it. So whether you are thinking of moving in 9 days or 9 months, be sure to reach out. You can call me, text me, email me, or even schedule a Zoom call. Trust me, I'm very easy to talk to, guys. So feel free to reach out. I'll be more than happy to relocate you and family in and around Kitchener-Waterloo. So let's take a look at the real estate market update that just came in for the month of November, just this past week. So if you look at the headline news, sales up year over year, but down if you look at the 10-year average. So they were up by 21% year over year compared to 2023 for the same period of November. But if you look at the 10-year average for previous 10 years, it is still down by about 13%. So this is just a high level in overview, but let's dive a little bit deeper and look at some key market stats. So I'm gonna scroll it up. Residential stats chart. So this is for the month of November. Total number of homes, we had about 544 homes sold in the month of November, slightly lower than the month of October. And if you look at average sales price for each home, single family detached 863, townhome 613, and you can see all those numbers right in front of you. I want you to take average sales price and the median sale price, which is the one below it. Take both of this with a grain of salt. You know why? I'll show you this. Average sale price is just an average. So if you had, let's say, $1 billion in real estate sold for that month for the whole region, and there were, let's say, 1,000 homes sold, that's an average. It does not mean anything in terms of where the market is heading. So just take it with a grain of salt. If you really want to dive deeper into what's the fair market value or which way the market is heading for your specific property type in your particular region, then I highly recommend you look up the MLS HPI tool, which is the home price index tool, which you as a general public do have access to it. You can just look it up on any local real estate board and pull up this tool. It's a great tool. I won't dive into it too much deeper in this particular video, but I would say if you were to play around with it, a great tool to get some really good insight about the real estate market. Now let's look at the average days on market. Fairly flat between October and November, around that 4-week period, 27 days. It was 28 in the month of September. This number, the higher it is, the more the control is in the hands of buyers. It's basically telling you that if you were to put a property on sale, on an average, it took about 28 days for anything to get off the shelf and getting sold. Now, it could really depend on the price range and the property type, but this is more of a general average to give you an indication. In a seller's market, this number is significantly low. In a buyer's or a rather balanced market, this number tends to be higher. So this is more of a balanced territory. The months of supply, we are around that 3 months range. What that actually means in layman terms is if no new homes were to come on market for sale in the Waterloo region starting today, it will still take close to 3 months to get the current inventory sold out. When this number is lower, it suggests a seller's market. when this number is higher, it suggests a rather balanced or a buyer's market. With this number sitting at around 3 months, it's considered to be a balanced market. But again, we'll dive into that part very shortly. Stay tuned. Hold your thoughts for that. New listings, we had close to 900 new listings that came up. One thing I want to point out, you will see there is a sharp decline. We are from September. What tends to happen, and this is a typical trend that happens every year, as we head from October to December, and you will see this number around now 900 for the month of December. When I do this update next month, it will be significantly low. Even in a good performing market, not new listings come up in the month of December. Sellers tend to hold off until January after the holidays. So we see that number go down dramatically in the month of December. So do expect that as we head into December. Now, sales to new listing ratio, that's a good number to understand whether we are in a seller's, buyer's, or a balanced territory. Now, let's do that ratio right now. I'm gonna pull up my calculator. And so we have new listings, 892. We had total number of sales for November was 544 divided by number of new listings, 892 times 100. That's the ratio, just over 60%. Now, if you were to go technical and the definition of it, anywhere under 40 is considered buyer's market, 40 to 60 is balance, and anywhere over 60 is considered seller's market. I would say it's still a balanced market overall. Okay, you're able to put conditions, you're able to do your due diligence as a buyer, and there are lots of options. We saw about the months of inventory, the number of homes currently on sale. All those things are pointing towards a balanced market. We are nowhere close to a seller's market right now. Now, having said that, I do want to highlight the fact that it is really price point specific in this current market. When things are all over the place, you do look at what's the price range where we have majority of the rush, and that's what indicates whether in this price range it's going to be a balanced buyer's or a seller's market. So we'll take a look at it very shortly. But for now, let's take a look at the rest of these charts, and I will take you to that next step. Homes for sale, we had close to over 1,500 homes for sale in the month of November. Now, remember how we saw that months of inventory, 2.8? So this homes for sale, 1,567. And we had 544 homes sold. So if you were to do 1,567, which is the total number of homes currently for sale, divide that by what's selling in the current market on an average for this last month, that's what will give you your months of inventory. So that's how we arrived at that 2.8 months of inventory in the Waterloo market. So this is to really help you understand how these ratios are interconnected to each other. Here, I might be going too technical for you guys, but just want to highlight some key aspects so you can better understand these charts as I'm going through it with you. Dollar volume of sales, I mean, it's good to know number, not really a crucial number to help you understand which way the market is heading. Now, I want to pull up my MLS system that we have access to as a real estate agent. And remember how I told you it's very price point specific in this market. Let's say if you were a buyer, like a first time home buyer, 700,000 price range, and you're looking to buy something. I'll tell you which way the market is, like where the majority of the action and rush is. So I look at last 90 days, how many homes entered into a contract and sold. So last 90 days, I will put Kitchener here, and the price range I have selected is 6 to 800,000. So you can see we had 162 homes that sold in last 3 months in this very price range of 6 to 800,000. Now, if I were to increase that, say 800 to million, the next 200,000 gap, we only had less than half, 64 homes sold in last 90 days. So less than a home a day in that price range. So you can see there's not a lot of action happening anywhere over 800,000. Now, if I were to take it a step forward and do 1 million to 1.2 million, only 23 homes sold in the entire city of Kitchener between million and 1.2 million in last 90 days. Now, these are pending transactions, which means the firm and binding agreement that was entered into between the buyers and the sellers during this given period of time. So Now let's assume that you are a first-time home buyer. You see why we are seeing so much rush in this price range is because for two reasons actually. Right now, majority of the buyers in the market are the first-time home buyers. Secondly, majority of the people who are first-time home buyers are able to afford somewhere between 6 and 800,000. Working with the buyers on a regular basis, we see typical avatar for first-time home buyer is someone looking in the price range of anywhere from 650 to 750. Very few will go up to 800,000. So that's the typical first-time home buyer budget, and that's where we are seeing the majority of action. So if you are a buyer, you can plan your strategy accordingly as to how to approach. In this price range, I can tell you these are mostly starter homes, turnkey homes. So sellers are actually holding offers on many of these listings. And yeah, there are some multiple offers happening, but nothing too crazy. I don't want to say it's a seller's market, still a balanced market. Despite the multiple offers, you are able to put your conditions, do your due diligence, do your financing, all those things. So do not let anyone tell you that, oh, it's going crazy. We have 5 offers. We just have to go firm. Again, this is not a real estate advice. If you are working with an agent, I don't want to solicit you in any way, shape, or form. Work with your real estate agent, but this is to give you my general perspective. So just want to highlight that as we don't want to step on any toes here. Now that does bring us to $1 million question as to what you can really expect heading into 2025. Now I want to share a great resource that I actually look up to, which is the RBC Economics. Now this is my go-to resource when it comes to understanding really where the market is heading, what we can expect, and we're going to take a look at it closely. But like I said, be sure to subscribe to this resource. I think it's very insightful. At least to me, that's what I found. Now, the Bank of Canada cut rates by 50 basis points. This is kind of a brief they shared yesterday, just after that rate announcement. So what's the bottom line? Now they are within that range. What is considered neutral, 2.25 to 3.25. So they are at 3.25 after yesterday's rate cut. But guess what? It's going to continue going down, but more gradual. So you may not see another 50 basis point rate cut. You would rather see more gradual 25 basis point rate cuts starting into the 2025. That's what you see. So in January, likely going to be another 25 basis point rate cut, and that's going to be followed up to the spring and summer, all the way because of the weak economy, the consumer demand that's ultra low right now, the consumer sentiments right now are at the bottom, and the labor market, all those data that is pointing towards a weak economy heading into 2025. And as a result, the Bank of Canada will have to push the rates all the way down to 2%, which is considered stimulative, which is basically encouraging businesses to borrow money, do more investments, create more jobs. That will boost consumer confidence and consumer demand as well, because money will be available at a cheaper rate and buyers will be more likely to spend, and consumer spending. That's basically how the stimulative policies work to boost the demand and boost the overall economic conditions. Now, let's take a quick look at the meeting recap. The GDP growth is well below the forecast for the Q3 and poised to undershoot again in Q4. Unemployment rate, we talked about it. It's at 6.8% in November. And, I saw that news article on CBC. It's, highest since 2017, except for pandemic when pretty much the economy was shut down. But that's very, very tough situation for the economy. And overall, you can see a soft domestic backdrop suggests a future path for inflation is still more likely lower. So it's still unlikely that despite this rate cut, we will go into a consumer demand boosting all of a sudden and pushing towards inflationary situations. That's highly unlikely. If you want, you can pause and read this. I will not go through the whole thing, but this in a nutshell will tell you what you can expect out of this economy, out of the housing market, out of the labor market heading into 2025. So if you're a buyer or seller, or if you're just a resident of Canada and trying to figure out what you can do and not do in 2025, it will really help you plan things in a more controlled manner. So I will link it in the description, this particular article, but wealth of resources, just want to highlight a few things. So you can see under economics, You have even one for Canadian housing. You have economy and market. I mean, look at the Canadian housing. Let's take a look at it. You can see it's really Canadian home sales jump in October, but strong pace will be hard to sustain. So it does really give you, what I like is it does give you that candid take on the market, not too of a gloomy picture, not too optimistic, but what is hard fact, and it's backed by the data. And I'm a data-driven person, so I love this insights from the RBC Economics. Like, one more thing I wanted to share is, like, you see how on point they are with their analysis. Like, they were just pretty much on point, like before even Bank of Canada announced the rate cut. Bank of Canada to cut interest rates again by 50 basis points. Now, this is affirmative by an economist, and it was held true when the Bank of Canada did finally announce the rate cut. So again, a great insight. So that's what we can expect 2025. Honestly, I don't feel like it's going to be a booming market. Even with the Bank of Canada stimulating the economy into the 2025 between spring and summer, that's when really they will approach that 2% overnight rate. And I feel like at that point onwards, we might see some boost in consumer demand, business investments. It's going to be very gradual return. And we have some other broader risk, like the tariff risk that recently came with the Trump administration taking power next year, and so many broader economic conditions. We are the least performing GDP amongst the G7 countries. So we have some bigger problems to deal with. So that's what we are seeing. I don't think it's the rates that's holding the buyers anymore, but it's more so the broader economic conditions. Until things do stabilize and buyer confidence comes back in the market, I feel like we are going to see a roller coaster ride heading into 2025. We're not going to see too high or too low of a market, but it will be all over the place, to tell you the truth, just like what we saw in 2024. We might definitely see a peaks and valley heading into 2025 when it comes to real estate market. But hey, don't go anywhere, because I'm going to cover this kind of insights every single month when a new report comes out from the Regional Real Estate Association. And at the same time, we will closely track as to where the market is heading. But once again, if you got some value, be sure to give it a like, subscribe to the channel, and tap on the bell. And whether you are thinking of moving in 9 days or 9 months, or if you just want to have a quick dialogue or a phone call, be sure to reach out. I'm very easy to talk to. You can call me, text me, email me, or even schedule a Zoom call. All the info is right below. Like I said, I'll be more than happy to help you and family make a smooth move in and around KWC. Until next time, well, I do hope to show you around town.